Welcome to the deep dive. We're jumping straight in today. Planet Labs Q2 2025 earnings, that's their fiscal year 26, and their guidance too. Our mission, unpack this really impressive quarter, figure out what's driving it and what it signals for them, especially with that stock surge.
Yeah, impressive is the right word. They didn't just meet expectations. They really blew past them, caught the market a bit by surprise, I think, in a good way.
Definitely a good way. So let's get into the numbers. What are the headline figures?
Okay, hard data first. Q2 revenue hit $73.4 million. That's a solid 20% jump year over year, and it crushed the $66.07 million forecast.
Big beat on revenue. What about earnings?
EPS came in at a loss of 3 cents, but the forecast was for a 5-cent loss, so they bit that by 40%. Pretty significant.
And the market reaction?
Oh, immediate. The stock jumped something like 18% in pre-market, ended up, I think, over 35% higher after the report. Just a huge wave of optimism.
Which is interesting given the run it's already had, right? Like 267% over the past year?
Exactly. Though it's fair to mention some analysis, like Investing Pros, flags it as trading above its fair value right now. So, context is important with that kind of rally.
Okay, let's unpack this more. Beyond the top line, what's underneath? What other metrics show this strength? What's really driving this outperformance?
Right, because it's not just the headline numbers. It points to real operational strength. Take their non-GAAP gross margin, it improved to 61%, up from 58% last year.
And non-GAAP means basically stripping out some one-off items to see the core profitability.
Exactly. So that 61% tells you they're getting more efficient at turning revenue into profit, better cost management, maybe how our margin service is clicking. And another big one, adjusted EBITDA, a profit of $6.4 million.
Their third profitable quarter in a row on that metric.
That's right. Adjusted EBITDA, earnings before interest, taxes, depreciation, amortization. It's a good pulse check on core operating performance. Consistency there is a great sign.
Okay, that's good. But what about cash? Growth companies often burn cash.
Well, this is probably the biggest news financially. They achieved positive free cash flow year to date, $54.3 million. With a 39% free cash flow margin. That is a huge milestone.
Wow. Positive free cash flow already. I thought that was further out.
Over a year ahead of their target, actually. It means they're generating cash now, not just consuming it. Fundamentally changes things for funding growth. And it shows in their cash balance. Ended the quarter with $271.5 million in cash and equivalents, up $45 million from the previous quarter.
Okay, so the financials look really solid, healthy growth, improving margins, generating cash. But where is this growth actually coming from? What gives them confidence it continues?
Yeah, it's pretty broad-based, but one area really stands out, defense and intelligence. That sector grew 41% year over year, just massive growth.
Tied to the global situation, I imagine, more demand for monitoring.
Absolutely. Geopolitics is a huge driver. Governments need this kind of intel. They landed some key wins there, like an additional 7-figure option from the U.S. DoD's Defense Innovation Unit, the DIU.
BIU, that's the Pentagon's commercial tech arm, right?
Yep. This is for a hybrid space architecture pilot. Think early warnings, indications, critical stuff. They also expanded their work with the NRO, the National Reconnaissance Office.
The U.S. Spy Satellite Agency.
Right. More planet scope monitoring, plus maritime domain awareness, or MDA. Keeping track of oceans is vital for security, fighting drug trafficking, even disaster response. And internationally, NATO picked them too. Another 7-figure deal for surveillance and warnings.
So, a really strong showing in defense. What about the commercial side?
Yeah.
And civil government?
Commercial saw about 6% year-over-year growth. Now, that might sound small compared to defense, but it's actually the first time in about 2 years they've shown year-over-year growth there.
Oh, interesting. So a turnaround. What's driving that?
Seems to be agriculture, energy, and insurance picking up. They won a new 6-figure deal with FarmDar, an agri-tech firm for crop insights, and they're continuing that work with Swisser on drought insurance. You might remember that $7.9 million payout in Syria. Aided 120,000 people, shows the real one impact.
That's powerful. Okay, and civil government?
That was actually down slightly, about 4% year over year, mainly because a contract with Norway expired. But they still scored new wins. A 7-figure ACV renewal, that's annual contract value with the UK Rural Payments Agency for environmental and farm monitoring, and a new project in Panama, helping monitor the Darien region for illegal mining and deforestation.
Okay, so growth across multiple areas, even with some fluctuations. But you mentioned confidence for the future. What gives them that long-term view?
This is where it gets really interesting from a business perspective. Look at their backlog. It increased 245% year over year. 245%. to $736.1 million.
Wow, that's contracted future revenue.
Exactly. And even more dramatic is remaining performance obligations, RPOs. Basically, the total value of contracts yet to be fulfilled. That surged 516% year over year to $690.1 million.
Okay, unpack that for us. What does a 516% jump in RPOs actually mean?
It means they have incredible visibility into future revenue, like
Yeah.
locked-in business that stretches well into their fiscal year 2027. It massively de-risks their growth story. It's not just hoping for new sales. A huge chunk is already signed.
And they're not just sitting still, are they? They're launching more satellites.
Definitely not sitting still. They just launched 2 more Pelican satellites, their high-resolution ones, Pelican 3 and Manny 4. They're being commissioned now. That brings the total Pelican constellation to 4. Better resolution, faster revisits.
And the other constellations. Tanager.
Yeah, Tanager 1, their hyperspectral satellite, just had its 1-year anniversary. Working with Carbon Mapper, it's detected methane and CO2 plumes from over 3,000 sources. Really unique environmental capability.
And these feed into those satellite services contracts, like the big German deal.
Precisely. That 240 million German contract, the ongoing one with JSAT, these satellite-as-a-service deals are booming. Countries want sovereign control over this kind of observation capability, given, everything going on globally.
So, strong quarter, solid pipeline, new tech coming online. What does this mean for their guidance? What are they telling us to expect next?
Well, reflecting all this, they've raised their guidance significantly. For Q3, they're guiding to revenue between $71 and $74 million. Analyst consensus was closer to $68.7 million, so well above.
And for the full year, fiscal 2026.
They raised the full-year revenue target, too, now expecting $281 to $289 million, again, comfortably ahead of the $272.6 million consensus. It shows real confidence from management.
What about margins and profitability for the full year?
They're expecting non-GAAP gross margin between 55% and 57%, still strong. Adjusted EBITDA is projected to be somewhere between a $7 million loss and break even, so right on the edge of sustained core profitability for the full year.
And investments. Still spending on new satellites.
Yep, CapEx planned at $65 to $75 million. That's for Pelican, Tanager, and refreshing the SuperDove fleet. Got to keep investing. But crucially, they now expect to be free cash flow positive for the entire fiscal year.
The whole year. That's huge, getting there so far ahead of schedule.
It really is. Financial independence, basically.
The CEO sounded incredibly confident on the call. Our business is humming, I think he said. What's the bigger strategy here?
Yeah, Will Marshall was very bullish. He really hammered home Planet's position as being central to AI. He framed them as, quote, the only space company that's truly central to AI, leveraging that data advantage.
How are they doing that? Just providing data for AI models.
It's more than that. They're building partnerships, working with Anthropic to fine-tune AI models on Planet data, collaborating with Google on models, using NVIDIA chips, even Snapdragon chips on the satellites themselves, so the satellites become smarter, processing data at the edge.
Interesting. So the strategy is keep growing revenue, obviously, expand margins with that subscription model.
Right. Drive revenue, keep expanding margins with the one-to-many data model, build for sustainable cash flow, innovate with AI solutions, and scale those satellite services. It all ties together. And they flagged their Investor Day on October 16th for more detail on all this.
Okay, it sounds overwhelmingly positive. But no company is without challenges, right? What are the potential headwinds or risks we should keep in mind?
Fair point. It's important to stay balanced. Risks include things like potential supply chain issues for satellites. That's always a factor in space. Maybe market saturation in North America eventually, pushing them more internationally. Macroeconomic pressure could slow down the commercial side.
And reliance on defense spending.
That's another one. If geopolitical tensions ease or budgets shift, that could impact a key sector. And of course, competition is always heating up.
Makes sense. What about the analyst Q&A on the call? Any particularly interesting nuggets pop out? Things analysts were really digging into?
Yeah, a couple of things stood out. Maritime Domain Awareness, MDA, got a lot of focus. They stressed it's their most mature AI solution, driving those big deals, Navy, NATO, Germany. The key differentiator seems to be its ability to, as the CEO put it, scan large areas and look for unknown unknowns. Not just finding things you already know to look for.
Finding the unexpected threats.
Exactly. And the other big point was the synergy in their satellite services model. When they build dedicated satellites for a client like Germany, it doesn't just serve that client. It adds capacity and improves revisit times for everyone using Planet data.
Ah, so it's a win-win. The dedicated contract funds more satellites, which boosts the core service.
Precisely. And the CFO added that these deals are great for their working capital. They help fund the fleet expansion without Planet having to put up all the cash from its own balance sheet. Smart financial structuring.
So, wrapping this up, what really stands out isn't just the strong numbers this quarter, impressive as they are, it's how they seem to be strategically positioning themselves.
Absolutely. You connect the dots and you see a company that's evolving. It's not just about collecting data anymore. They're leveraging AI aggressively, locking in long-term revenue streams, which gives that visibility, and hitting financial milestones like positive free cash flow way ahead of schedule. It's a combination of tech leadership and increasingly financial discipline.
So here's a final thought for you to consider. Given Planet Labs' unique spot right at the crossroads of daily global monitoring and this huge AI wave, how might their insights fundamentally change things? Not just for businesses, but for how governments, organizations, everyone responds to massive global challenges like climate or security in the coming years. Lots to think about there. Thanks for joining us on this deep dive. Keep exploring, keep questioning.